So, good evening, everyone. Myself, Omkar, on behalf of Kirin Advisors, I welcome you all to the virtual roadshow of Method of Software Limited. So, today we will provide a brief overview of the company and its innovative business model. So, Method of Software Limited is IT services and digital transformation company offering technology-driven solutions to the global clients. It provides a comprehensive suite of services, including cloud services, data and AI services, cybersecurity, ERP, CRM integration, IT infrastructure, and recruitment delivery services and combined offerings. So, from a company side, we are pleased to have Mr. Ahobalam Nagasundaram, Executive Director and CEO of the company. Good evening and welcome, sir.
Good evening, Omkar.
Then we have Mr. Ravi Sharma, Chief Financial Officer. Good evening and welcome, sir.
Good evening. Thank you.
Then we have Mr. Shankar Krishna, Financial Advisor. Good evening and welcome, sir. From the merchant banking team, we have Mr. Rajesh. Good evening and welcome, sir.
Good evening, everybody.
So, with that, now I would like to hand over the call to Mr. Ahobalam to give a short introduction of the company and walk us through the presentation. What do you, sir?
Thank you very much. Thanks, Omkar, and on the team to arrange this roadshow. Methodhub is a software services company or an IT services company, which is headquartered in Bangalore in India, and we have offices and delivery centers out of Chennai, Hyderabad, and Mohali. We have a subsidiary. We have a subsidiary called Methodhub Consulting Inc., which is based in the US, headquartered in Atlanta. We have in turn a step subsidiary called Zotech Solutions Canada, which in turn has a subsidiary Zotech USA, Zotech Solutions USA. So these four companies or four entities are the part going into the IPO process. And as a company, we focus on four major technologies: data, AI services, cloud services. We have ERP, CRM services, and cybersecurity. And in terms of industries, we cover five major industries: banking, financial services and insurance, healthcare, oil and gas, telecoms, tech infra, and we have recently made a foray into the automotive and transportation sector as well. So globally, about 296 employees at last count, and we have grown progressively over the years. And the main differentiation for a company is that we move fast into hot areas of technology. If you look at our current the areas of business, cloud, data, AI, ERP, CRM, and cybersecurity, it represents about 80 to 85% of current IT spend of most large enterprises globally. So we are in very hot spaces of business. We compete with large companies in most cases, and in some cases we compete with local players as well in US and Canada. But primarily we go head to head, toe to toe with some of the large players, and to do that we have equipped ourselves with strong certification, strong compliances, and partnerships with some of the leading major names in the world. Together with our partners, we offer a range and suite of solutions, which makes it a very compelling offering to look at Methodhub as a long-term enterprise vendor who can shape the digital transformation process of the customers that we are engaged in. In terms of revenue, Ravi, you want to take that, or I will? We have our revenue for financial year 23 was about 36 crores. It moved to about 57.6 crores in 2024, moved to 136 crores in FY25. And this half year, we have done about 80.2 crores. And that's the performance. That's been our performance. The PAT and the EBITDA information, Ravi will furnish down in one of when the right slide comes up. So, in a nutshell, a company which is growing and globally present, primarily in US, India, and Canada, and with majorly four technology areas, five industries we serve, and with all the certifications, compliances, and partnerships which are relevant in this business. Next slide, please. In terms of vision, mission, and values, our vision has always been to be a stable partner as the customers progress through either technology disruption caused by a leader or other followers who follow the technology disruption provided by the leader. So we have various kinds of customers, and change happens because of changes in business models, domains, technologies. Some technologies converge, some domains converge, and all these things involve significant change, and we help our customers navigate through that change. And as a company, we've always believed that it is not that business skills or technology skills, one of them will be sufficient. We will need to bring both. We need to understand the technology, we need to have technology skills while understanding the business context in which these technology solutions have been implemented. So once we understand that, that's when we think that we can give good value for our stakeholders, but we want to do it in a socially responsible way. In terms of strategy, our strategy has always been to diversify our business in terms of technologies, in terms of industries, and in terms of geography. So we have executed our strategy in such a way that it brings quicker learning, fast business stability, and process maturity, because we operate in 3 major geographies, and also we operate in 4 different technologies and 5 different business verticals. Next slide, please. I alluded it in an earlier slide. We always position ourselves against large players because the kind of business which the large players do, there is sustainability, there is also scalability. And to do that, our pitch has always been that we are a microcosm of a large company. Whatever a large company, large enterprise has got, we also have it, but in slightly smaller numbers or significantly smaller numbers. So if you take clouds, a large company would have 20,000 people on the cloud, we would have 25 people on the cloud. Someone in data, they may have 40,000 people, we will have 45 people, 50 people. So we have all the technology bandwidth in the areas we are talking about, and all the support structure, shared infrastructure, shared services, etc., which a large company would typically have. So we always say that we are a microcosm of a large company. It's very little to choose between us and them, except in terms of size, in terms of delivery, in terms of sophistication, engagement capability, partnerships, compliances. There's very little daylight between us and the large company, and that's how we position ourselves. So when we take this position, our approach is that we are small enough to be nimble, big enough to be stable, and that is very endearing to a lot of customers. A lot of customers want to know, will the vendor stay around, to service me tomorrow? And we have addressed that extremely well with all the financial stability we have displayed over the 5-6 years, and also with the IPO process, we come to a level of stability and visibility which will be very comparable with some of the big names. Also, we have a very clear roadmap to acquire and accelerate growth while we grow organically. We have added Salesforce in the US, we've added Salesforce in Canada, we've added lead generation teams in India, we've added sales teams who work out in India in the night shift. So all these to increase organic growth, while we'll also look at targets of opportunity as they happen from time to time. Next slide, please. As a company, we do the whole range of IT services, starting from consulting. Then we go to managed services, which are SLA based. Then we provide IT-centric business services, help desk, and many of related services. We also do, or primarily we do, project engineering. We also we also provide product development services all the way up to platform development, which is basically products which are globally impacting. For example, if you take Western Union or you take Google or Facebook, these are not products used by a few companies. They're used by the whole world, probably billions of people at a time. So we have had that capability to build such products. We have demonstrated it in a few situations that we are capable of building global world-class products from offshore delivery centers. Next slide, please. Our leadership roles are on the screen. We have people who have got up to 15 to 30 years of experience, proven experience working in large enterprises, large organizations globally, who form the India leadership team, which is the prime mover of this of the company at this stage. Good. Next slide, please. So I'm the executive director and the CEO of the company. Mr. Kannan J. Ramakrishnan is a chairman and the independent director. He comes with tons of experience. He's a doyen of the IT industry. Was a vice president in TCS. He held major roles in major government bodies, etc. in very senior capacities. Prasanna and Mani Mohan Raj bring financial background to the table, and Latika Pai, ex-Microsoft, works is also providing us a lot of technology inputs as an independent director. Next slide, please. So this is what I was talking about. We almost have all the compliances and certifications a large company would have. ISO 9000, ISO 27001. We are a SOC 2 Type 2 company, certified company. We are a great place to work, certified company. Particularly in the small company category, we had a very, very high rating. And also as a company which is a safe place to work for women, we had a very, very high rating, much above industry average. So we've been doing certain things right, and we got the certifications to show for them. We are also in the process of getting HIPAA certified. We got all the proprietary data, and we expect to get certified soon, though I wouldn't be able to commit to time. Business. So these are the areas where we operate: cloud, data, cyber security, ERP, CRM. We also, IT infrastructure, and we also provide recruitment delivery services in some tactical situations where the customer only asks for that. And in most cases, our combined offerings includes a combination of cloud, data, etc., so that we can give a comprehensive solution to the customer. Next slide, please. Yeah, so these are the industries we operate. As I said, BFSI, healthcare, oil and gas, telecom, tech infrastructure, and recently added automotive. And we also do a lot of IT consulting as a vertical, because we work with PwC and a few customers, in servicing their requirements as well. Next slide, please. So in banking, financial service, or in each and every vertical, what are the sub verticals we handle? That is explained out in the screen. We have very good sweep in terms of business understanding and business domain and subdomains, and that helps us put together a comprehensive solution, when we are encountered with a business situation. Next slide, please. Again, 4 major areas: cloud, data, AI, ERP, CRM, cyber security / infrastructure. These are the technology areas or horizontals we operate in. Next slide, please. These are the sub-horizontals. I just wanted to give more clarity in terms of what we do in terms of specific work in specific areas. Again, they form the entire breadth of that horizontal. So the multiple, if you take cloud engineering, we work in all the 3 clouds: Azure, AWS, and GCP. If you look at databases, cloud databases, we work both with Snowflake and Databricks. In fact, we're a partner with both Snowflake and Databricks. We also work with a lot of data integration products. We are a partner with Dremio. So we have good standing in all these areas. In ERP, CRM, we are a Salesforce partner, and we have strong expertise around SAP, Oracle apps, and of course Salesforce. So all the and in terms of cybersecurity, almost everything which is hot in cybersecurity, that mainly implementation of products, implementation, for example, SailPoint, ForgeRock, CrowdStrike, multiple products we have capabilities in implementing. We also do EDR, the endpoint detection and response. We also do security posture analysis and penetration testing and multiple other services in cybersecurity. Next slide, please. So a company like Methodhub, why would a customer look at us for business? Strong technology competency backed by partnerships. We have very strong understanding of US, Canada, India, labor, immigration, federal, state regulations, everything. So we bring strong capabilities there. And we can fulfill across geography, US, Canada, and India. And we can also fulfill in other locations, but we bring highly mature recruitment capability, highly mature HR capability, and a good amount of solid branding, internal marketing, internal messaging, etc., to keep the spirits high, to keep the motivation high, to make people feel that, and which we are, to make us feel that we are a very happening company. And that is very important in keeping internal motivations and internal belief in the company high, so that attrition is always kept to a minimum. So and then we also have strong capabilities, as I already said, in multiple technology verticals. We can go all the way from doing staffing to setting up a development center or a GCC or we call it an EDC or a BOT. EDC is an extended delivery center. BOT is a build, operate, and transfer model delivery center. We can do all of them, and we have capabilities. And the leadership has proven that in earlier organizations where they worked, setting up 300, 500 people facilities in as GCC for global delivery. Next slide, please. So what are our competitive strengths? Primarily, experience, leadership, and skilled workforce. The leadership has worked with 30 years of experience in large global organizations in global responsibilities. And for the four technology areas we operate, we have very, very strong skill force. Workforce. They come from very established organizations, have experience bandwidth from anywhere from 5 to 20 years. Understanding business technologies, they've lived through multiple technology cycles, they live through multiple business cycles as well, and gives us the platform to continuously innovate. As I said, we've always catered to diversified verticals, and that brings reasonable mitigation of business risk. Any slowdown in any sector or any slowdown in any geography, etc. We've always been a very certification-oriented, compliance-oriented, process-oriented company, and that has resulted in we getting most of the certifications in very quick time, and also sustainably holding them over a long period of time. I believe that with 4 delivery centers offshore and with all the infrastructure that we have built in all these places, we are ready to scale our business significantly. As we push for more work offshore with our customers, we're also whatever acquisitions we look at how much or more can be done offshore, how much more capability can be built around offshore delivery. Our client relationships have been quite strong. We have done very good work. We've had multiple accolades, accomplishments, and appreciations for our work, and that has also helped us cement our relationship with the few customers which we have. But these are very strong multi-engagement relationships. Also, we've been a robust. We're a robust financial company. We've done quite well from a financial perspective. Met all our obligations on time and discharge all responsibilities on time. So our financial performance has been healthy, and we have also been managing our financials reasonably well. So all these things are what we think are competitive strengths. Most service companies would have this, but it is a matter of degree as to how one company is better than other by executing that better with what we have. Next slide, please. These are some of our partners. In most cases, we position our partner solutions to build on the consulting business and build on the implementation business, because these are talking points. As I said, we are not a product company, we are a services company. So we need some products, or we would like to have some products which can be the talking point to get customer interest or position the overall solution with the backbone, with the product as the backbone. So these are partners we've had. They work in different specific areas. Appligos is in low-code, no-code development. Green Futures is in IoT. Factorize is in automotive recall management. AROI is in carbon management, carbon wallet credit, carbon credit management. AQuad is a AI platform. CXsphere is a customer service AI platform. We are also talking to a few other people, and we will announce them as we make the partnerships official. Next slide, please. Again, we have multiple strategies depending on geography, depending on the line of business. All that I'm trying to say is that we're thinking through on multiple lines to be able to build a company, grow the company, also able to provide good mitigation against the market risk, technology risk, geographic risk, immigration risk, so many other risks which we encounter in the marketplace. Next slide, please. So a typical company like us, the strengths, weakness, opportunity, threats have been listed. That will be also shared with you, so you can have that. Next slide, please. This is a run up on the industry. So IT is a very mature industry, and I don't have to talk too much about IT industries. We are a small but a growing part of the industry, and I feel very good about our positioning and our business prospects in this business. Next slide. Next slide, please. You may want to go zip through the next 2-3 slides. These are business data which is available in public domain.
All good now. Okay. Right, sir. Number, sir.
I will hand the floor over to Ravi to navigate through the finances.
Ravi, I'll take it over.
Okay, sir.
Yeah. Good evening, everybody. Just to give you the key highlights about the financial performance of the company in the last 3 years, as listed out in the RSP, and also for the stub period ending September 2025. So the slide that is reflected before you will very clearly demonstrate that the company has gone from strength to strength from 2023 to September 2025. The last 3 fiscals have shown considerable and phenomenal growth in terms of CAGR on both on the revenue line, and also kept improving the margins consistently with a lot of offshoring facilities from whatever Mr. Ahobilam, the executive director of the company, explained in terms of the strategies that we have followed, both in terms of the organic growth and also in terms of the inorganic growth, has ensured that we moved from 2023, a 37 crore base, to something like about 134 crores in 2 fiscal years in March 2025, with a remarkable top line growth. And for the first 6 months of current fiscal year, we have ended the year with about 79 crore plus revenue, with a very healthy 18% EBITDA and about 12.5% of PAT. So this is the summarization of how we have performed in the last year. Currently, we are holding a very sizable order book value, which has to be executed in the next couple of years. So given the track record of our earlier last 3 years growth and the current order book on hand, we would continue to grow the same CAGR healthy numbers in the coming year as well, is what the current order book is indicating. The margins profiling will continue to be much better in the coming years, in view of the fact that the proposed acquisitions out of the IPO will help a reasonable chunk percentage of those acquired companies, the work being offshored into our 4 major global delivery centers in Mohali, Hyderabad, Bangalore, and Chennai. And this will be our USP. And as explained by our ED, the company is very strongly positioned in terms of the in thing of the technology and the in thing of the services providing, and the greatest of technology that is in force, which is adopted, and the senior leadership team will help along with the order book position for the numbers to grow rapidly, maintaining and improving the margin profiling in the coming years. The IPO of the company is basically for a 28.02% of the post-IPO dilution, distributed between primary to OFS. Primary would be about 87.5 crores, and OFS will be about 15 crores from a financial investor who has stayed invested in the company from 2020 onwards. And that is how the structure is made. Out of the 87.5 crores, it's a 29.17 crore, which is earmarked for Anchor, which we were able to successfully complete at the end of the evening today. And the objects of the issue for 87.5 crores would be about 13.6 crores would be deployed towards repayment of the loan, making the company more or less debt-free. And that will also release about 10 crores out of the FD collateralization with the banking system, helping the acquisition of company corpus to grow and successfully conclude the 2 targeted companies which we have mentioned in the RHP we acquired in course of time post the success of the IPO. About 25 crores is being augmented as a long-term working capital for the company. About 4 crores is being invested into one of our subsidiaries in the US towards the working capital requirements. The remaining amount after the issue expenses will go towards the unidentified acquisitions of company together with the GCP is how the structure. And as I explained earlier, the post-dilution equity into the public will be about 28.02%, which includes market making and which includes anchor investors also. Any further questions on the financials in minutest details or on the objects of the issue, we'll be very happy to take your questions for the investors. Thank you so much.
So, thank you, Mr. Avalam. Thank you, Mr. Shankar. So with that now, we will start with the Q&A sessions. I request all the participants to post your questions in the comment box. So we have missed first question from Mr. Prem, that is the company mainly about product services or a mixed consulting and offering?
We are not about products. We are a services company. Services are delivered in multiple ways. One of them is as a project. One of them is platform development. The third is managed services, and fourth one is consulting services. So the short answer would be a mix of services, including consulting, is the offering. There are no products with us. We represent products of various large brands and also small brands in specific vertical areas. We implement the products. We do not own any IP.
Next question. So we have Mr. Next question from Mr. Neeraj, that what distinct role do each of the subsidiaries play in the overall strategy?
Okay, so we are headquartered in India. So India is primarily like any other company. India is a primary delivery center. We offer 4 different locations in terms of geography spread. We bring all the capabilities across all these locations. So India is primarily a delivery center with a little bit of business in the IT side. We of course have telecom and tech services business which we do out of India. The US subsidiary primarily drives offshore business and also local US business, and the all the 4 verticals, all the 4 technologies and all the 5 verticals are serviced in the US. They're also serviced in Canada. So between US and Canada at this point in time, I would say is a hedge, in terms of immigration, in terms of market slowdown, market performance, etc., and also the local economics considerations in these different countries. So as I see that 3 subsidiaries between US and Canada, they provide a revenue basket which has got reasonable amount of de-risking within the 2 geographies. It was not so evident earlier, but with the last 1 year, it's very evident that Canada could be a good counterfoil to business in the US. India primarily is a delivery center, and the subsidiaries in US, Canada bring in the revenue to a large extent. India is primarily telecom, tech infra revenue, and a little bit of IT services revenue.
Thank you. Next question, please. We have next question from Ms. Krisha, that how do the promoters and board split responsibility between strategy, operations, and governance as the company prepares to list?
I primarily take care of. I mean, I'm the chief executive officer and an executive director. I primarily take responsibility for all business performance. Okay, I take advice from the chairman and the other board members in terms of guidance in long-term vision and long-term view and technology, perspective. But strategy and operations are driven primarily by me. There is an independent, there are a couple of independent directors who bring governance to the table, who bring the governance aspect to the table. And Shankar, you want to add anything on this as you?
I think it is purely split between the operations at the hands of the executive director and the entire senior management team, and board comes in with looking up and fine-tuning the strategy and reviewing the operations and performance, etc., and adds very high levels of ethical governance attached to it. Is probably surveillance by the board.
Thank you. Next question, please. So we have next question from Mr. Chaitanya Deshpande, that how does your leadership experience influence the way your team works and gets things done?
Okay, so I have more than 30 years of experience globally, worked in multiple geographies, serviced multiple countries, and I've always brought speed and business clarity to the execution. And the team, the team which I drive, inspire, and motivate brings a lot of similar skills, so that we all row in one direction to build and grow the company in the fastest possible time. Okay. But from my leadership experience in consulting, my leadership experience in fulfillment across various geographies, and also working in multiple different countries, it gives me the diversity of the experience. And the team and the board, the couple of independent directors, the board also, gives leadership inputs from time to time. But from a operations perspective, there is a significant experienced team with very multiple global assignments which they have done, and that brings speed. As I said, speed is the single biggest differentiator, and also business understanding, which we bring, considering the multiple technologies we have handled, multiple business domains we have handled over a period of time.
Thank you, sir. Next question, please. So we have next question from Ms. Chaitali, that which of your core service line currently contribute the most to the overall revenue?
If you look at industries or verticals, banking, financial services contribute about 35-40%. Telecom services contribute another equal size, but telecom is split between Canada and India, and the rest of the business lines contribute about 30%. And if you look at it from a technology perspective, data/AI contributes 43 to 45% of our revenue. Cloud services bring about 15%, and all other things put together make up the balance of about 40%.
Thank you, sir. Next question, please. So we have next question from Mr. Bhavin, that how is the revenue mix balance between the project-based work, managed services, and staffing and recruitment delivery?
Okay. Staffing okay, the way we define staffing and staffing recruitment delivery is, if we are not managing the project, we just deploy the resource and the customer manages the project. So let us call that staffing. Let's not use the phrase recruitment delivery here. But so between project-based work, about 30% of our business is project-based work. About 40% of work is managed services. When I say managed services, these are SLA-based, time-bound services. And the third one, staffing, is about 30. So 30, 40, 30 would be a good split of this.
Okay, thank you. Next question, please.
Actually, I will add a couple of sentences here. This is not the number which we had about 3 years back, 4 years back. We had a lot more of staffing, but we have progressively moved the quality of work. We have progressively moved the value addition which we have done over the work, and that's how we are now landing at a 30, 40, 30 kind of a mix. It used to be a lot more staffing earlier, but we have reduced and increased project-based work and managed services work over the last 3 years.
Okay, thank you, sir. Next question, please. So we have next question from Mr. Amit, that what is the current on roll plus consultant headcount, and how is the talent distributed across the geographies?
Ravi, do you have a pie chart to show that?
I think if you go into our business section, we have given segment-wise staff count. I can tell you that we have a count of about 296 as of September 2025. Industry-wise, geography-wise, is put out in the RHP in the business section, which will give you a detailed analysis.
296 is the employee count, and probably about 100. And don't hold me very tightly on that. About 100 will be the consultant head count across.
Sir, I'll add to it. Total of 27 consultants and 185 employees in India, totaling to 212. In Canada, 62 consultants and 11 employees, totaling to 73. Zortec US, again, 4 consultants, 2 employees, totaling to 6. And Methodhub Consulting USA, our wholly owned subsidiary, 95 consultants and 199, 1 employee. So totaling to, 2 consultants, 1 employee, totaling to 3. So overall 294 as on 31st October 2025.
Right. Thank you, Ravi.
Okay. Thank you, sir. Next question, please. So we have next question from Mr. Vedant that which two verticals are the most profitable today and why?
I would say if you look at percentage profitability, it is not so much driven by vertical as it is by the class and the type of customer. Because we work with a very high-end customer in big banking financial service, that's our highest, most profitable business. The second most profitable business would be oil and gas, but that is only in terms of percentage profitability. In terms of dollar numbers, the first would be banking financial services still, and the second would be telecom.
Thank you, sir. Next question, please. So we have next question from Ms. Aditi that what are the typical parameters of a large engagement, deal value, duration, and the team structure?
Uh, okay, if you look at our largest customer, which happens to be a BFSI customer, again, typical parameters of a large engagement would be about 30 people or so. That's the typical size we engage. That's what most customers feel good, in terms of giving to a company like us. And they will probably grow with them, but the first deal would probably be a 30 people deal. And deal value roughly would be a combination of on-site and offshore. If you look at, say, about $700,000 to $1 million would be a certain engagement or an SOW. Okay, so we can call that a deal. An SOW we can call it a deal, and that would be about 700,000 to $1 million. Duration, again, this is kind of typical. We have three types of business. The first type of business where the customer gives the clear 3-year visibility. It's a managed services kind of a deal with SLAs. The second one is a deal we know goes for 3-4 years, but the customer's process will warrant that we get it renewed every year. It is invariably an automatic renewal because we know that the customer has pending work to do, he has budgets to do, but they get refreshed every year. So that's the second type of work. The third type of work is work we complete every year. Okay, so it's an SOW for the year. So the duration is a little bit of a difficult answer to give as one answer. That depends on the typical deal. For managed services, it's for 3 years duration. For long development cycles, it is 3 years but renewable every year. And for tactical work, it's every year. Team structure, we have a team lead at our side, or a project manager, program manager who manages 3-4 different engagements of a particular customer, and then there is a team lead who owns a particular engagement or a particular project, and then you have module leads, and then you have team members who are at the operational level. We also have some shadow resources in some situations because some of the work may involve night shift, etc. So we always want to provide business continuity and team stability. So we'll have probably a couple of shadow resources as well. That's the typical team structure. There's a program manager, there's a team lead, module leads, team members, and some shadow resources. Is there, Aditi, did I answer your question well, or you want me to explain it further? Okay.
Yes, sir. Yes. Yes. So we
yes,
have next question from Mr. How is the customer demand? Mid-size IT companies are growing faster than larger ones.
I think that is probably. I do not want to talk like an industry specialist, but from my visibility and my company's work, I would say that customers are a lot more comfortable now engaging with smaller companies. Now the technology has become very democratic. Access is available to a larger set of players, etc. And also smaller companies, they end up doing a prototype even before a large company get an internal approval. Okay, so we bring speed to the table, and a company like our size, mid-size companies, and also because the denominator is smaller, we tend to grow faster in terms of percentages. Customer, if you ask me how demand is changing, particularly with AI, particularly with data, where we operate very strongly, we've seen that size of the vendor is not a major differentiator anymore, but the skills, partnerships, and speed and ability to show prototypes and understand customer context is increasingly becoming important.
Thank you, sir. Next question, please. So we have next question.
At this point, yeah. I'm able to see the question on the screen. You think I should go ahead and answer that? Is it okay, Omkar?
That hello, sorry sir, sorry for disturbance in my network.
No, our ED can see the question below on his screen, so he's requesting whether he can go ahead and answer them.
Yes. So
Yeah.
let me
So
read out it as yeah. You can go ahead and answer this question.
our on-site business would be about 50%, primarily because of TELUS, which is primarily because of a customer in Canada. We provide a lot of on-site services for them, so that would be significant. Rest of the work is offshore.
Okay, thank you, sir.
It's almost
Next.
50-50, you would say.
Okay. So, the next question is from Mr. Vedant again that BFSI currently dominates the North American export market. So, how does this influence your client portfolio and revenue distribution?
Okay, so we are a small company, so our percentages could shift if we land a big deal suddenly. But our large customer happens to be a BFSI customer, and typically BFSI customer BFSI is a high IT spend industry, and that it is to a large extent slanted towards BFSI at this point in time. Our revenue distribution, I think about 40% should 30-35% should be BFSI, another 30-35% would be telecom, tech infra, and the balance is spread across other verticals. So, I mean, at this stage, yes, we are like any other company, any other big, large service company. There will be a slant towards BFSI, not because they focus so much, but because BFSI is always traditionally a high IT spend industry. Yes, we have multiple platforms which we have partnered with. As I said, we are not a product company, but we implement and integrate products of major large players. As I said, we are Snowflake, Databricks, Salesforce partner. We are also Dremio partner. We also have multiple partners with application-oriented products, meaning they handle a certain vertical industry. We have a partnership with an automotive recall solution company. We have a partnership with a customer support AI company. We have partnerships with a few other companies, one in which we will announce soon, so I wouldn't want to talk so much about it. In newer areas of AI, AI again is a very, very large, wide area, and there are sub areas of AI which are developing. One in customer support, one in document management, one in model risk analysis, something else in pharmacovigilance. So many other areas which are which are available where use of AI is becoming very widespread. And we have partnerships. We have a few partnerships. We will announce a few partnerships as they get ready. And these are the platforms or products which will help us build our consulting and build our solution base, so that that could be implementation dollars, that could be consulting dollars, that could be managed services dollars down the line after we implement all these products. So we expect our SaaS platforms to support growth significantly going forward, both the big brand name ones and also the smaller ones which are very industry focused. Thank you. Omkar, are you?
So I think some network issue from his end. Let's wait for a couple of minutes.
Hello. Hello, sir.
Yeah.
Hello, sir.
Yeah, Omkar, you seem to have some network issue at your end.
Sorry for the disturbance, sir. So we have next question from Mrs. Chaitali that EBITDA margins are now around 18 to 19%. So what is the sustainable band you are targeting over the long term?
See, the EBITDA margins have been mainly the profit profiling. The margin profiling has been on the increase based on the quality of orders and the robust model with which we are executing the same. And organically, probably it will continue to be at the same EBITDA margin levels that we are forecasting. In terms of improvement over a period of time, yes, it is very much on the cards. The objective is to always keep on improving the supply chain and the robustness on the execution, and also lay more stress on the more offshoring of the opportunity from the overseas acquired business into our global delivery centers, where we see a cost advantage. So over a period of time, we expect that probably the margin profiling should continue to be on the increase.
Yeah, more work is more transformation work is happening offshore. That increases the the margins. Also it also increases the stickiness of revenues. All the more important thing is that as we mature offshore capability, etc., the experience curve effect also will kick in, which will give us more lower cost of execution for every dollar of business.
Yeah.
Okay, thank you, sir. Next question, please. So we have next question, a question from Mr. Panchal that ROE and ROCE have been strong but volatile. So what factor explains this spike in FY24?
Ravi?
The return on equity and return on capital employed in FY24, there was a spike. There was an upward spike because the capital base was small and our margins had improved. Also because of the substantial increase in the turnover. Turnover almost doubled from 35 crores to 58 crores.
Right.
And then at FY25, we acquired a company in Canada, which is our step-down subsidiary now. We acquired 51% stake. And the total income grew because that 100% of the turnover is consolidated, and profit is only 51% consolidated. That's why you see that sudden spike. And then FY25, it has lowered a bit.
As we also, to add to what the CFO is saying, as we increase the post IPO scenario, once the capital structure settles down, we have had a lot of infusion of capital in the last fiscal year, which has substantially added to the growing the business, etc. So as we settle down in terms of the capital structure, I'm sure the volatility in terms of ROC and ROE at a much healthier levels will settle at par with the peer comparisons.
Okay, thank you, sir. Next question, please. So we have next question from Ms. Chaitanya again that how do your partnerships and certifications translate into higher wins rate or the ability to command better pricing?
It's a combination of both. It's a combination of both because we in most of these cases partnerships and certifications are almost becoming a tick box. If you're not getting inside the room if you are not having these partnerships and certifications. So they are a kind of a tick box as we position, but in conjunction with other aspects that we have, for example, the kind of customers we work for, the technology spaces we work in, that helps us command better pricing. But win rates, I wouldn't say so much win rates, but more in terms of ability to command better pricing. And that's the benefit of having strong partnerships and certifications.
Okay, thank you, sir. Next,
That is because of the context in which we compete. I told that we compete with a lot of big names, so they also have that. If we don't have that, we are not even let inside the room. But with this, we are let inside the room, and then because of our ability, visualization, better price, structure, model, flexibility, multiple other things which a small company can bring to the table, that is help. That will help us in higher win rates.
okay, thank you, sir. Next question, please. So we have next question from Mr. Rahul, that how do you differentiate Methodhub against large IT players when pitching to North American clients?
Strongly with all the certifications, etc. Again, that is a level play that levels the playing field, and they will look at a smaller company. Number one. Number two, once they look at us in conjunction with other large players, we bring speed to the table. We are open to a prototyping. We are open to proof of concept. We can do various things by which the customer can visualize an eventual solution. That helps in bringing the customer closer to the signing point. At the same time, we've also always communicate that we are small enough to be nimble, big enough to be stable. Our financial stability also comes in, and that eliminates our disadvantage against large players. Finally, our track record with large companies. I mean, the kind of companies we have worked for, these are companies which large companies would kill to have as clients. So these are real big names. And when for example, one of the customers we have is a large credit rating services company, and if you have worked with the credit rating service company, you don't have to explain yourself your capability on data or on cyber security, because data and cyber security are what makes a credit rating company run. Okay, and that's very core to their business. It is data and cyber security are not ancillaries to their business. That's core to their business. So that's an excellent use case. That's an excellent proving material or a reference point. Also, we do ERP integration work in a big way. We don't do so much ERP implementation as we do integration. Again, integration of ERP with other homegrown applications, that's a rarefied playing field. It's not a very common field where everyone can provide services. It requires expertise in 2-3 technologies and also business understanding. So we've been, I would say, we've been at the right place at the right time in some situations. Also, in some cases, we've had strong references which have helped us, against larger IT players.
Thank you, sir. Next question, please.
Oh, it's too forward looking. I don't know whether
No. The question is from which gentleman?
Nisha Baran.
Nishaji, see, the constraints with regard to the IPO process and the SEBI ICDR guidelines, etc. The company is always constrained by any statements on the about the future or the numbers and those kind of things. All I can say at the end of the day is when you see the fiscal performance in the last 3 years, the CAGR with which we have grown, the margin profiling that we have kept improving year on year, and the order book position that we have got on hand, which is reflected in the prospectus, and the proposed inorganic acquisitions that we are likely to make, I'm sure the company will continue to maintain the same tempo is what at the best I can make a statement on.
Plus, we work in good hot areas of technology where customers continue to spend significant amounts of money. And we are also well positioned in terms of partnerships to be able to be a very compelling vendor in such situations.
Exactly.
Thank you, sir. Next question, please. So we have next question from Mr. Deepak, that to what extent does the company face challenges in scaling IT infrastructure or delivery capacity to meet the growing client expectations?
We do not foresee at the scale at which we are operating and at the foreseeable future, we do not foresee any major scaling issues in IT infrastructure or delivery capability. But I think client expectation setting is important, and if we manage client expectations the correct way, we do not foresee any major challenges in scaling IT capability or delivery capability.
Okay, thank you, sir. Next question, please. So we have next question from Ms. Dia that what are the main strategic objectives of the IPO?
As I mentioned earlier in my summarization speech on the objects of the issue being three, four, one, two, three, fourfold. One is for the repayment of debt, making the company almost debt-free, which is about 13.6 crores. To augment long-term working capital of the company, where we have earmarked about 25 crores. The third pillar being the investment into a subsidiary in US to the extent of about 4 crores for augmenting the working capital purposes there. And after the issue expenses, etc., probably we would be left with about 32 crores of money. And that is what is going to be primarily deployed towards the unidentified acquisitions for which certain targets have been mentioned in the RHP. That's exactly where the whole money of 87.5 crores is going from the primary that is allotted from the IPO. Yes, sir.
Omkar, any further questions?
That what is the company's annual planned investment in R&D or capacity upgrade to remain the competitive in rapidly evolving technology areas such as AI, cloud, and cybersecurity?
Okay, so we are not primarily a research or a product company. So we are a services company. Our investment in R&D, etc., is restricted to building solution accelerators or building writing white papers, providing technology thought leadership in a particular area, and stuff like that. So I would think typically about 3% would be a good number for us. We've been tracking that kind of investments. In fact, if you look at the past, without talking too much about the future, if you look at the past, we have ourselves increased our offering, in terms of more and more value-added offerings. We've added in the capability. We've invested in resources, particularly to bring that kind of revenue mix. Now that we do more solutions, more managed services, that comes out of significant investments in high-level technology resources, particularly in AI, cloud, and cybersecurity. If you look at our website, there are enough white papers published which reflect our thought leadership in various technology spaces, how we look at the market, how we look at migration from technology A to technology B, etc. All these happen with a dedicated team which invests in the developmental research or desk research or analysis and in preparation of white papers and such kind of documents. In short, our R&D investment and capability upgrades are to help us remain competitive in the solution areas and in the business offerings or the technology offerings we are currently doing, and they happen to be in AI, cloud, and cybersecurity only eventually.
Okay, thank you, sir. Next question, please. So we have next question from Mr. Vedant that what step is company taking to diversify its revenue base, given that the top clients contributes to 32.09% and the top 10 clients contributes 95% of the operational revenue?
I'll take this question in two parts. One is the organic growth. We've added sales team in the US. We've added sales teams in Canada. We have set up a lead generation team in India. And also we have set up people who do sales from India in the night shift, targeting the US market. And then all the new additions, I've been told to go after new revenues and not work with the existing customer base. That itself is supposed to diversify our revenue base to a large extent. The second one is the unidentified acquisitions, which will also bring in new clients and diversify the overall revenue mix. I do not expect the same client to contribute 32.09 1 year down the line. It could be a much lower percentage, even though the overall revenue has grown. It could still be a lower percentage. Again, as a mid-sized small company, is very typical that top 10 clients contribute that much. We are always in the process of increasing the revenue base so that top 10 clients don't contribute 91. You would expect top 20 clients or maybe to contribute 91.95 eventually.
Thank you, sir. Next question, please. So we have next question from Mr. Vedant, that how does company mitigate its financial risk if one or more major clients reduces the business volume or terminate the contract?
Abdul, the only way we look at it is to increase the organic sales through organic channels, for which I already explained. We have the sales infrastructure setup, particularly lead infrastructure setup, lead generation infrastructure. We also do a lot of social media marketing, social media promotion of all our services, by which we will be able to reach new customers in the same 3 geographies we operate in. So that is one way of the organic way. The inorganic way, of course, we have some unidentified acquisitions which we will do, which will increase the revenue base and diversify the financial risk.
Okay, thank you, sir. Next question, please.
We have a team of 6 technology leaders who have been working with us, who come with both technology and industry background. Our data practice head is an ex World Bank database person. We have our network service head is an ex AT&T person. So we have people who understand where technology is moving and where businesses are spending money to be competitive in their own business. So that is our internal team assesses that. We also participate in lots of conferences, media, etc., to see where the technology is going. And all these are we cross pollinate between ourselves regularly to ensure that our strategy is to remain in very hot areas of technology. If something else changes, we will. If someone says quantum computing, we will see how we will move in that area. So we look at various technologies, and as a strategy, a company like us will be successful if we move into hot areas of business quickly. We can move into a business area quickly where it will take a behemoth or a large company time to move into, and so. That is very essential for us, our growth and survival, and we have the people and the organization to be able to pick up on trends quickly, invest in them in terms of white papers, in terms of strategy documents, etc., so that we can get the customer's mind share in these areas. If you look at our Methodhub.in website, we have various white papers we have published. There are multiple areas where there is focus. One is mandatory use of AI. How do you use more AI to be able to provide better service and more competitive services at competitive cost points to the customer? How do I help a customer move from licensed software to open source software? How do we manage FinOps or optimize the cloud bill of the customer? How do we help a customer reduce the experience level required to do the work every passing year? Today, a 5-year guy does. Next year, can a 3-year guy do the same work? That will happen through process maturity. So it is a combination of technology leadership and also business thought leadership. And these both things put together will help us, stay relevant to the customer base that we are servicing.
Okay, thank you, sir. So we have next question from Mr. Sumit, that are these risks of services obsolescence related to the legacy offerings, and how is the company addressing that risk?
Actually, we have very little technology obsolescence because by definition, we are not working in any technology which is more than 10 years old. We don't have any mainframe work. We don't do any AS400 work. We are not doing any old, anything pre-2000. We are not doing any work in that area. Almost all of our technology, 85 to 90% of our work is in technologies which have been around for the last 5-10 years. So for the size of the company that we are, as I said, speed in moving into newer technologies is our USP and our value offering. So our risk of service obsolescence is very, very low, and we do not see major need to address a risk of that nature.
Thank you, sir. Next question, please. Okay, thank you, yes, sir.
Thank you
you
so
very
much,
much.
I
man.
think we have
Thank you.
covered all the
Thank-
majority questions.
Thank you.
Thank you very much. Thanks a lot.
Thank you.
Thank you,
Thank you.
everyone. Thank you, Avilam sir. Thank you, Shankar sir. Thank you, Ravi sir. Thank you, Rajesh sir.
Thank you.
And all the best for your
Thank
IPO
you.
ahead.
Thank you so much, sir. Thank you, everybody.
Thank you.
Thank you. Thanks a lot. Lots of questions, very insightful. Thank you very much.
Thank you.
ಒಂದು ನಿಮಿಷ ಸರ್ ಮಾನವದ